Property investing done right now, you don't need to wait 10 years for your property to double in value. You can time the market using data and have your property double in some instances in just 2 years or just 3 years. People have experienced that in places like Armadale in Perth, places like Northern Adelaide, places like Brisbane, the affordable sub 500K category a few years ago. But that can still happen right now, even after the COVID boom. How do we know that? Because it's happening right in front of our eyes. In this episode, we'll talk about Darwin. Now, I don't want anyone to misconstrue anything I'm saying. Watch right till the end because I'm not saying buy in Darwin. I'm not saying don't buy at Darwin, but the rationale so you can make an educated decision yourself will be presented to you throughout this episode. Right now, Darwin is booming. It's the hottest property market across Australia. Is this the right time to buy in Darwin? Stick around right till the end. I think you get a lot of value from this episode.
Welcome to the Oz Property Investment Mastery Podcast. My name's PK and I help busy people build passive income by buying top 5% growth and cash flow property and build a portfolio using data without wasting months doing research, spending weekends at inspection or catching flights, or dropping $10,000 to $20,000 on buyer's agents every single time. So if you're confused, lack confidence, and just overwhelmed with all the information and marketing misinformation available online and don't know where to start, then this show is for you.
I want to share a stat right now. I'm going to share lots of statistics as we go through. Only 17% of Darwin households have a completely mortgage-free property. Okay, completely mortgage-free. You compare this to the Australian average, national average, that rises to 34% across Australia. 34% of properties are completely mortgage-free. It's kind of surprising, right? In fact, another statistic is that the total national LVR or loan-to-value ratio in Australia is less than 20%, which means of all the residential housing value put together, which is above $11 trillion, actually less than 2 trillion, I should say, is encumbered with debt. So we don't have a debt problem in Australia when it comes to the housing market. And that's why our mortgage arrears are still under 1%, still like pre-COVID levels. So there's no problem in that regard. But when it comes to Darwin, okay, when it comes to Darwin, this is not quite the same. Only 17% versus 34% for national average of households are mortgage free. What does this tell us? Even though right now there are places in Darwin, Palmerston, etc., or thereabouts that are rising 10, 20, 30% capital growth in the last literally 6 months to 1 year. That's a reality. But should you buy in this area right now, or is it too volatile? Some property markets, they're great for flipping, okay? Some property markets, they're great for buy and hold, set and forget. And some property markets are for higher risk investors who may think, okay, I'm going to have a stab at the dark in this. Okay, it may not have all the fundamentals, but I may make a absolute killing in the short term anyway. Let's see which category Darwin falls under. I do want to say that new property listings, i.e. supply in the Darwin property market, it's fallen to its lowest levels since April 2019. Okay, and actually nationally that's the case as well. Right now, only 19,650 properties are listed for sale across capital cities in Australia. Of course, Darwin is a capital city as well for Northern Territory. And this is a low, a 6-year low. Okay, so when supply is shrunk or is low and demand is robust, then property prices have to grow. It's just the law of supply and demand. And here's the thing, right now, Darwin listings are down. There's been a huge drop in Darwin housing listings. They're down by 37.9% compared to this time last year. So it's not like, oh, this is, excluding seasonality. Maybe summer impacts that, maybe winter impacts that. Actually, like for like, we're about 40% down on housing listings in Darwin. So when there's less houses for sale and 40% less, even if demand isn't that strong, prices are going to go up. Now, I want to consistently reiterate this episode is not about me pumping Darwin. I don't own a property in Darwin. My clients, I think probably only a handful of clients have bought in Darwin. And I'm not recommending you guys put a blindfold on and invest in Darwin. But why am I talking up Darwin? It's because Darwin is the kind of property market that can do incredibly well. It's already doing incredibly well for those who have a higher risk appetite. It doesn't have the economic diversity that other, even large regional areas like Wagga or Toowoomba or Newcastle have. It doesn't have that despite being a capital city. I want to share a stat with you real quick right now. Okay, Darwin house prices have risen just 10% in the last 15 years. This is excluding this year. But before that, okay, before that, the preceding 15 years, it actually grew faster than Sydney. Okay, it's unbelievable, but not the last 15 years, but the 15 years before that, it actually grew faster than Sydney. And so this is what happens when you've got small markets that are easily impacted by large infrastructure projects. When you've got large LNG projects off the coast in Darwin that are in not production mode, but expansion mode. They've just recently drilled and found gas, and now all of a sudden, there's a $50 billion project with tens of thousands of workers needed. Those kinds of phenomenon, especially if there's a lot of them, they can really make a huge impact in a small, illiquid market like Darwin. And that's when it's great to invest. But right now, I'm not seeing a huge pipeline of approved infrastructure works. Now, when it comes to infrastructure, not all infrastructure is the same. Yes, there's talks of LNG plant expansions. Yes, gas prices are going up, which means a lot of previously uncommercially feasible projects may become commercially feasible. But none of this is actually set in stone because for it to actually impact property markets, these projects need to cross what's called a final investment decision, FID. I used to be an investment banker. I covered oil and gas stocks at JP Morgan. So I know how these pipelines work. Pardon the pun. Not talking about gas pipelines, but pipelines of projects. Initially they're in exploration phase, concept phase, design phase. It's only when it's rubber stamped, all the funding is approved either from the federal, state, government, or private financiers, that is when the jobs start coming in. So there is significant hope for more infrastructure projects like this in the Northern Territory, off the coast of Darwin, etc., but they haven't reached funding stage yet. And so that's why for me and for many other low risk investors, we say it's too risky to buy in Darwin. But I don't want you to watch this episode or listen to this episode in 3 years' time and say, PK was so wrong. Like Darwin property prices have doubled. And that's what I'm saying. They've already gone up 20, 30%. Because for those who have the requisite risk appetite, it can be an amazing play. You can make a complete, like, you can hit the lottery in Darwin right now, still now, even though a lot of it's gone up 20%. You can still hit the lottery. Yields are still above 5, or in some cases 6%. You can still buy something under 600K, under 700K, which, let's be honest, for a freestanding house, you can't really do anywhere else in a capital city across Australia, or a large capital city at least. So I think Darwin could give you a lot of upside, but if you're low risk like me, you want to be buying a property that you don't have to worry about, should I sell in 6 months because these projects didn't transpire? Should I sell in 1 year because these projects didn't transpire? You want to be able to keep it for the long term for passive income, because we want that golden goose to lay eggs so we can exit our 9 to 5. Oh, I do want to say Cairns property prices grew 151% between 2010 and 20, sorry, between year 2000 and 2010. In just 10 years, far outdid places like Sydney and Melbourne. So Darwin can perform like this as well. These small property markets can perform like this. This is even better than Townsville, right? But what I'm trying to say is that it's not for everyone. So do your due diligence, and I'm hopefully giving you some ammo so that you can do your due diligence. Okay, Darwin also has the lowest vacancy rate right now across all capital cities in Australia. The vacancy rate, the tightest vacancy rate in Darwin for the last 10 years, it's just 0.5%. You the second best or tightest vacancy rate in Australia right now is Hobart. All right. So right now, Darwin is definitely strong, not just in the buying and selling market, but also the rental market. What that tells me is that there is a lot of momentum. Prices almost have to go up. But one thing that, for those of you who've reached this far in the episode, I do want to say, and I've said in many different episodes before, a lot of this, or I would even say the majority of this demand action in Darwin is by buyer's agents. There's a lot of buyer's agents, clients come to the buyer's agent and say, I want to buy something under 600K. I want something to close to 6% yield. The buyer's agent, 95% of the time, doesn't really care for the client, doesn't really care about their money as much as they do. Of course, that's true 100% of the time. They will just fill that brief and say, "Well, Darwin fits that brief." Now, it's not entirely the buyer's agent's fault, although it's kind of negligence on their part in some cases. It's actually the fault of the client. They should also specify, "No, I want something low risk. I want something low maintenance. I want something where the economy is diverse, where my property prices can't go down by 50% in a year as well," right? It's not just the upside you have to look at, but the downside as well. But they don't say this to the buyer's agent, so the buyer's agent takes advantage of this and puts them in Darwin. Now, this is what's happening. Over 50%, in fact, my real estate network and property manager network in Darwin is telling me more than 60 to 70% of all transactions right now, especially under the 800K category, are done by buyer's agents from Sydney and Melbourne. So this artificial demand can really take the rug out from underneath all these property investors that are going in. But what may happen and what may make this demand more sustainable is if local home buyers, first home buyers think, hey, okay, even though this demand is like completely surprising because none of my friends or family locally are buying here, the prices are rising by all these interstate people and they of course hate them. We gotta get in. Okay, if we don't buy in now, in 2 years' time, in a year's time, we'll be priced out of the market. Now they start flooding into the market, and now this demand becomes sustainable. So it's so strange, like property in Australia, especially these smaller markets, they're so prone to be artificially manipulated by buyer's agents, of whom there's more than 5,000 right now. And these buyer's agents are completely they don't care if in 2, 3 years' time the market drops. By that time, they've already made their 15, 20, $25,000 commission. They've washed their hands of the client. They've got the good review because in the short term, the property price went up. They're on to their next client in a wait list of maybe 20, 30 clients. It's a transaction for them. So this is the problem. In Australia now, I'm finding that these smaller locations, buyers agents are coming in, artificial demand, but then it becomes sustainable because first home buyers get FOMO in that location, and therefore that becomes then sustainable. Historically, what would happen is if a boom was investor driven, then it would also bust. That would be the definition of a bubble. And you would want to try to identify locations where the boom, the genesis of which was owner occupier driven, and then investors piggybacked on the back of that. And that was sustainable. That was not a bubble, that was a boom, a bona fide boom. But now it's hard to decipher or delineate between the two. But this is the risk of Darwin. I'm just trying to be honest and transparent. For this reason and many others, my clients haven't really gone into Darwin in a big way, but that doesn't mean they've missed this opportunity. They've got the same gains, if not better, in other locations, regional, right now, regional Victoria, regional New South Wales. There's so many opportunities, even in some capital cities. Hobart starting to pick up a little bit. But hopefully, I'm starting to paint a really interesting picture of Darwin for you. Overall, Darwin's likely to go up, but is it for everyone? Not necessarily. My name's PK. Hit the subscribe button. Thanks, guys.